everyone, welcome back to my channel RJ Trades. If you have not subscribed, please don't forget to like and subscribe. Click that bell button so that you will get all the update about any of the new videos. If you have subscribed, thank you very much. So today's topic, one of the most frequently asked question for me is how do you scale in, scale out? People are confused about scaling in and scaling out. So I'm gonna kind of show you how do you exactly do the scaling in and out, and I hope that will help a lot of you. So let's get it started. So in basics, scaling in and scaling out basically means like you don't buy everything at once or you don't sell everything at once. This strategy will work whether you are day trading or even swinging or even let's say you are investing, right? So it doesn't matter what you are doing. If you are investing, all it means is don't, let's say you want to spend uh, 10,000 in Microsoft, Apple, Amazon, whatever ticker it is, like Tesla, right? Don't buy everything at once, right? Buy in a chunk. Maybe I usually do like 25%. If I want to get in for long terms, I'll buy 25%, whatever my amount is. So let's say if it's 1,000 I want to invest, I'll put 250 right now. Maybe if I see another opportunity, add another 30 to 40%, and the rest at least 2 to 3 times, at least I would say 4 times, at least minimum 3 times, but depending again. But again, if you are doing options and you are doing just a one contract, you can't really scale in and scale out. But the good things about option is if you have a spread, even if you have let's say 200 for a lot of tickers, if the price is pretty decent, you can actually get the spread for 20 to $30. Right now after the split, you can even buy Apple for pretty much $50 for a dollar increment usually, if they spread with this dollar. So you do have a lot of option with even the option. So let's get it started, right? So this is Tesla, right? To Tesla, one thing I want to share is at the end of the day, nobody knows like where the market is going, right? Market will does its own thing, but you gotta look at your key area. If you are technical, just look at the technicals and where's the support and resistance, and based on that you do it. So I'm gonna show example of here, right? So for example, so Tesla has a huge run after they had a great earnings and they delivered their the numbers on July 1st, right? So it went up to all-time high of pretty much 361. This is after the adjusted price after the split, but it kind of hit the high, then tried the high again, kind of rejected, then kind of slowed down. Then the news came of the split and it just started boom, right? The thing is like a lot of people is like, why not enter here? Nobody knows, right? Nobody knew like it's gonna go here. If somebody knew exactly that's gonna happen, I mean, um, you don't need to watch this video, just repeat that, right? So at the end of the day, no one knows where they start going. It could have just gone here and kind of down, or it could have just done anything basically, right? Or maybe after that good news, maybe some bad news would have come, and it just, so you don't know at the end of the day, you don't know where the stock is going. But if you look at that, this is a key area because this rejected right here, it rejected again, it rejected again, it rejected 4 or 5 times. So this is the key area. So you look at this, I mean, if you are day trading strong trade, like you can of course just do the same thing, rinse and repeat for the day, same exact, this is daily candle, right? If you are doing day trade, maybe you'll look at 15 minutes or 30 minutes, but this is a kind of swing idea more than day trade. But here, so it went up, up. Now you see it tried to test the same area, about 335, right? 335 area, and you can see that it kind of rejected the first day and rejected second, clearly rejection, right? But the next day it just kind of blew past that. Then let's say you wanna put like 10,000, right? Then you can enter maybe, 2000 or 500, right? 2500 something, right? We'll just make it four chunk for easier. So you can, so if you are just buying some spread, uh, like let's say 3 weeks out, you can get one spread right now, right? And you see all the strength like very strong, right? It just came, and now the next day it opens kind of right there, right? So it kind of acts as another key label. So now it rejected that one, and it rejected that one. The next day it's just kind of coming going up, and it looks like it passed all those. So now you can enter another one, right? You can do the same thing and enter here, here, and here, right? Now you enter, like, you have your pretty much all the position. The thing is, like, a lot of people will ask, like, why not enter everything? The thing is, like, you don't know it's gonna go that way. It could have just gone this way too. That's why when you do in chunk, it usually help, right? So if it did not work here, if you went this way, you just had like one contract. So instead of, let's say, you were planning to spend 10,000, like if you got in 10,000 or here and it goes right here, and you probably lost like 50%. You lost like, I mean, I'm just giving example, but 30-40%, whatever. You could have a tight stop loss, but a lot of time it could have just gone down, you got out, then it could have come up too. So you don't know exactly. So that's why scaling in kind of works. So you scaled in right here, your whatever you want. Now scaling out, same thing, right? It went, so as it goes up, you should increase your stop loss. For example, if you got in here, now it's kind of resisted, and maybe first your stop loss should be right here, this area maybe, right? Now you are here and looks like a this holding pretty good support. Now put your stop loss from here to, you move it here, 3. Now it's just holding again, just rinse and repeat. You need to give enough room so that it doesn't execute, because a lot of swings happens. So but you keep increasing, right? And you are here now, maybe your stop is here, it goes down, boom, you are out of the trade, but you made from here to here. That's a nice chunk of money. So that's all is scaling in. Basically the idea is don't put everything in. Same thing with the long term too. I'm gonna give an example of Bank of America. So Bank of America, uh, I think it's a great buy right now too. Once we have COVID vaccines and everything's kind of under, they should do pretty well. But at the end of the day, nobody knows the bottom, right? I was kind of getting in, like I was adding right here. I added few here, few more, and it kind of tried to go up, but these are long term, so I wasn't even selling it. Then it went down again. I added few, now it went down more, I added. So what happened is, like, when I if I had added everything, let's say if I had like everything at 25, I would be losing almost like $2 per stock, right? So for if I had 1,000 stock, that's 2,000 loss. But if I did like kind of added as it goes down or up, I reduce my average cost. That's called dollar cost averaging. That's the whole idea you want to do. So, and a lot of times what happens, like, let's say this is a daily, but this is daily candle, but let's say you have a minutes and you think like it's pretty strong, you have this support label. So you don't buy everything at once, cause a lot of time it's constant. So you got some here, that's fine, but you got it here, key area it's holding, maybe you add some, so that way you reduce your cost, right? So now, before, if you got here all at once, to make a profit you need to be here. But if you can average down and your average is right around here, you can even be profitable right here, you can sell it, right? That's the other point. So yeah, again, the basic idea is don't buy everything at once. So buy in a chunk. That's how you scaling. What is scaling out? Same thing, right? Scaling out is let's look at the BA had a nice run, and we're gonna look into, let's say, 15 minutes chart today, right? So yeah, so you are day trading, right? You heard like BA had really great day, or they had a big candle, everything positive, market is positive, your thesis is working. So you added some here, great, and it's going up, and you want to add here, and you added here. So you added like a couple of times here, right? Kind of making like ascending triangles, and it just broke out. So you think it's gonna do great, so you kind of consolidations, you added more, right? Now what you do, now it's up here, you are like 20%. So let's say you have a 4 contract, you sell some, right? You made something, you already made 20%. Kind of consolidation, let's say this is your key area. If it goes below, you are trying to get out. If it goes below, you get out, just that's fine, right? You lose some, you win some, but it's holding it, it's going up. Now you kind of scale out more, and you scale out more. That way, basically what you are doing is, like, if you sell it all at once, you won't get the benefits when it's go up and up. That's why when you scale out in chunk, you can actually make some more, right? So basically, if you, let's say in each trade, like you are making here you made 50 bucks, right? Maybe here you're making 100 bucks, so you made four trades, like 50 bucks, 100 bucks here, that's 150. And let's say you're selling everything there, that's maybe 150, so that you made like 600 700, right? But here, if it was just for example, you had a four contract and you're selling all are profitable, you just made 200. So that's why, again, nothing works. Maybe it could go down and you will think like, oh, I should have just sold everything. The thing is, like, nobody knows, right? So you look at your key area, what's your thesis, and you just basically keep building it. You don't do all at once. That's all is scaling in and scale out. I hope this helps you guys. So if you have any more questions, please do comment below, and I'll be more than happy to answer. But seems like today we had a great day. Other than that, pretty good. And have a great weekend. Thank you everyone. Thanks.